for taking the time to join us today to explore the business case for farmers to participate in digitized agriculture value chains. We have an exciting agenda lined up, and I hope that you will leave this webinar with a better understanding of the economic benefits that farmers can capture through the digitization of agriculture value chains. So my name is Lisa Chassin, and I am an Insights Manager with the GSMA Agritech program, and I will be your host today. A quick housekeeping rule to begin with. Throughout the webinar, you will have the opportunity to ask questions on the chat, and we will answer those questions at the end of the session. You can find the chat icon on the main menu on the top of your screen. And we are also recording the webinar, which will be made available on our website in a couple of days. So without further ado, let's have a look at the agenda. After a short introduction to the Agritech program, we're going to hit things off with a short quiz about smallholder farmers, as they will be central to the session today. And although, it will be hopefully a fun introduction to the topic, but it won't be enough to generally understand the challenges that smallholder farmers are facing to improve their livelihoods and income. So that's why we have the pleasure to have with us Massimo Pera from the Food and Agriculture Organization of the United Nations to walk us through farmer livelihoods and portray how they traditionally engage in agricultural value chains. We will then share some insights from research we led in early 2021 that measured whether and by how much the digitization of value chains allows for improved farmer shares. And Rodolphe Bodo from Altai Consulting, who supported us with the research, will present the case studies we conducted in Nigeria and Pakistan, and will highlight for us the key takeaways. Finally, we will hear from our panelists, Fejero Bagi and from Agromole Nigeria, and Azam Khan from Farm to Home in Pakistan, who have both participated to the research, and they will share how digitized value chain models can provide additional benefits to farmers and supporting their livelihoods and income. So before we start, I'd like to acknowledge our donors. This material has been funded by UK Aid from the UK's Foreign, Commonwealth and Development Office and is supported by the GSMA and its members. I would also like to introduce the GSMA Agritech program and the work that we do. So as a program, we support equitable and sustainable food supply chains that empower farmers and strengthen local economies. We bring together and support the mobile industry, agriculture sector stakeholders, innovators, and investors in the agritech space to scale digital solutions for farmers in low and middle income countries. And since 2009, we have been supporting initiatives that have registered over 12 million farmers. The program focuses, as you can see, on three main topics. The first one is the digitization of value chains in the last mile. So where we facilitate the adoption of digital technologies in the agricultural last mile, meaning in the web of relationships and transactions between smallholder farmers and crop buyers, for example, such as agribusinesses and cooperatives. We also look at climate resilience. We support a variety of climate resilience services, from weather forecasts to digital agronomic advisory, IoT solutions, and agriculture insurance. Finally, we aim to contribute to farmers' financial inclusion through the digitization of farmers' records and profiles that can create economic ideas that support access to financial services. So before we move to the fireside chat with Massimo, let's try out our little quiz. Could we launch the quiz? We've prepared 2 quick questions to test your knowledge as a group on smallholder farmers' role and quality of life. Can we have the first questions on screen, please? Is it coming up? Or do I need to unshare my screen? Okay, so I think a poll is coming up, but it is not working at the moment. Or it's loading. Do you relaunch it, Isaac, please? Okay, apparently it's up. Sorry if I could. Could you share? Okay, so let's take just maybe 1 minute to answer that question. So how much of the food consumed in Asia and Sub-Saharan Africa is produced by smallholder farmers? How much do you think? You can submit as soon as you think you have an answer. Okay. Do you see the results, please? Very good. I think like the majority of you found the correct answer, which was 80%. So indeed, smallholder farmers do produce more than 80% of the food consumed in Asia and Sub-Saharan Africa. And it is actually up to 30% when we consider the food that is consumed all over the world. And for some value chains, they even contribute more to that. For example, if we take the rice value chain, they contribute to 80% of the global production. For groundnuts and palm oil, it is 75%. And for meal and cassava, it is 60%. So they do a lot for food systems all around the world. Can we have now the second question, please? So same, you can take 1 minute to answer what proportion of the world's extreme poor live in rural areas where most of smallholder farmers are. What proportion of the world's extreme poor live in rural areas? Again, very good. The majority of you answered 78, which is the correct answer, showing that poverty among smallholder farmers is widespread. And in most countries, it is actually much higher than the national poverty headcount rate. And the key takeaway from this little quiz that I wanted to share is that we see that despite being the backbone of our food systems, producing much of the food that we consume, a large majority of them is trapped into poverty. And now we're gonna delve a bit more on why this is. And we are going to do this with Massimo Pera. Hello and welcome, Massimo. Massimo works as an agribusiness officer for the FAO. He is based in the regional office for Sub-Saharan Africa in Ghana, where he leads projects to make agriculture value chains more inclusive and supporting smallholder farmers in becoming more competitive, sustainable, and resilient. So Massimo, you've been working on smallholder agriculture for more than 15 years, and you've learned a lot about the challenges that farmers face along all the years you've worked. So can you please share with us why it isn't easy to be a smallholder farmers nowadays, and why can't they make a living income through the food they produce? And finally, if you could touch upon what are the challenges that they face, that would be great to hear.
Sure. Thanks, Lisa, and good morning or good afternoon, everybody. So being a smallholder farmer, I think it's never been easy. Being a farmer and working in agriculture is an issue everywhere, but it's particularly challenging for smallholder farmers, for farmers who hold small plots of lands, 0.5 hectares, 1 hectare, 2 hectares. It's always an issue. And first of all, it's because of this issue of being small. You don't produce much, and when you sell your products, you have a very weak bargaining power. That goes without saying. So I would say the first thing is really related to the lack of access to a diversified set of markets where you can sell your products. Basically, you have, on average, smallholder farmers have one, middleman or trader who makes the price, and they have to stick to that price, basically due to this lack of bargaining power. And if you look at the margin, at the share that they make out of the final price, it's a very small share. And I think this is what's coming out also of the work that GSMA has done, right? And this share has been decreasing over the years, meaning that, it's always been like that, but it's even worsening in a way. And so if you look at some of the most relevant, either cash crops like coffee or cocoa, or staple crops, you mentioned them, cassava, the margin, the share that the farmer get out of the final price is very, very small. And so access to market would be one. But then there is also a lack to other services that really makes it challenging for them to live, to sustain their livelihood on agriculture. And this is why they very often have a diversified sources of income. They have to do other works besides growing food. One is access to finance. And especially because, again, of course, there's an issue in supply of finance. Agriculture is risky, is considered as not, it doesn't have a high return, it's very expensive. And so for all these reasons, it's very hard for farmers, smallholder farmers, to access financial services. Moreover, those middlemen, for example, or the traders or the buyers of the products I was talking about, are those who usually provide advance money to them. But when they pay back, when they buy their products and they discount what they have borrowed to them, actually the hidden price that they apply, it's even higher than the interest rates of the bank. So they're really trapped into kind of a situation where it's very hard to, expand the business or thinking how, to grow in years, or going through a pathways that would see their business growing. That's the other thing. And finally, I would say there's a lack of access to main information on prices, once again, information on potential market outlets, information on technologies, best practices, and so on. So we could talk about this for hours, but I would say that these are, the main core reasons why, as you were saying, regardless, producing, being the majority of the producers of the foods in their countries and continents, yet they really struggle to survive, on that.
Thank you, Massimo. Sorry, I was trying to mute. Well, that's very interesting, and well, I'm happy to hear from you. Not happy is not the right word, but because we're going to talk a lot about farmer shares later on. it is good that you highlight that those shares are quite small for smallholder farmers nowadays, and they tend to be decreasing, which is not a good thing for farmers to be able to sustain their livelihoods. Going back on what you said about access to markets, could you please help us understand better what type of value chains are smallholder farmers operating in? And that will also be interesting if we can have indications of how many farmers operate through each of these value chains, and also what are the shortcomings of these value chains for farmers to improve their livelihood and income?
Well, typically, value chains especially for staple crops in developing countries are very loose. They're very fragmented. There's a lack of governance throughout the chains. And so, this is why investments into these value chains do not take place. So these are, if you think about, for example, the fact that you could have a deal with the farmer to buy an X amount of food produced by that date, but given the need of the farmers due maybe to a drought to consume part of that food, or maybe another buyers came before and offered a higher price, you don't get the food that should have been produced, right? And this is the case of the majority of the value chains. Approximately 60% of farmers operate in these informal markets where they sell to middlemen or they do some side selling. And 40% of smallholders access through agricultural value chains, and only 19% have a formal contract. So you have different kinds of value chains. You have intermediary-based value chains where there's no market entry conditions, prices are more volatile, and the prices are unknown to farmers ahead of the sale. But then you can also have more integrated value chains, especially when for more solid, more sound value chains, like again crops value chains. Think about cocoa once again. So in this case, high quality produce is expected, but in this case, market entry is limited to large or commercial farmers. So we're talking about medium large enterprises in this case, which are the minority of the farmers, as we saw. And so basically, in terms of the shortcomings for improving farmers' livelihood and income, basically, well, I think it's quite understood. No, I mean, if you operate in a value chains where you don't have a control over the price that will be paid to you, and you don't have basically any affordable access to financial services and technical support and technical advice, then of course, operating in an informal, fragmented value chain makes it very hard for you to, improve your livelihoods. And then also access to infrastructures, especially if the crops that you produce are perishable. If you don't have the option to store the products at harvest time so that you can sell them when the prices are higher and not at harvest time, that's also another lost opportunity to grow, because you don't get enough money to reinvest in the next season. So this is one of the reasons why it's important, and I think this will be explained by the business case that you show, that some value chains, by being digitized, brings benefits to all the actors of the same chain.
Thank you. Yeah, there's a lot of information on this answer that you gave. And I understood from what you said that most of the farmers operate in informal value chains, although formal value chains will bring more benefit, more security to farmers. Market entry is more difficult. So that's really interesting to know. And you've touched upon this quite a bit already, but besides being able to access markets to sell their produce, you mentioned rightfully that farmers also need access to other key services in order to increase and protect their yield. So you've mentioned they need to have access to information to know about how best to grow their crops, but they also need financial services to invest in their farm and protect their production in case of climate events such as drought or flood. Could you please tell us how available these services are in traditional value chains that farmers operate in?
Well, as I said, if you think about financial services, there's a huge gap. I think there was a study disseminated 2-3 years ago that put together the gap in financing for smallholders worldwide, and it was something around $170 billion. So the reason there is that, as I was saying, investing in agriculture is risky and is very expensive. And but the thing is that on the supply side, in many cases, financial institutions, being them microfinance institutions, banks, formal or semi-formal financial services providers, they don't have the instruments to even understand if there's a business opportunity in agriculture, right? So if you look at the difference, I mean, in developing countries, there's a huge difference in terms of what how much farmers borrows in general. In some countries, you can see that like 50%, 65% of farmers in a given year have borrowed money, but like just 10% of them have borrowed them from financial institutions. But the other 40% still receive money and repay those money even at the higher price, which means that there's an unmatched demand for financial services that could be given. Now, if smallholder farmers manage to be part of a more structured and more formalized and integrated value chain, including being part of this value chain through digitized financial services, then it would be easier for other actors throughout the chain to have a profile of those farmers, know how much they sell, know the volumes of the products that they sell, know having access to their cash flows, and plus seeing what kind of business networks they have in their area. And this helps assessing the potential opportunity in financing. So this is why I think being part of integrated and more structured value chains is very critical for smallholder farmers. But because this would basically give them, we go back to the first question, this would basically give them the opportunity to access a wider set of markets. This would give them the opportunity to have more bargaining power in setting the prices, for example, and also this would give them the opportunity to access other services as financial services, input-related services, technical assistance, and so on.
Thank you very much, Massimo, for setting the scene so impeccably. I think you covered a lot of important points that is important to keep in mind when working towards equitable and sustainable food supply chain. So thank you again.
Thanks.
I think now the question is what can be done, right, to support farmers in overcoming these challenges and provide them with what they need to better things off. So you've mentioned, we know that digital technologies provide opportunities to connect people more easily and manage operations more efficiently as well. But how can they be leveraged within agricultural value chains to economically benefit these smallholder farmers? And slide, sorry. Oops. Yes. So there could be several angles to this question of how digital solutions could be leveraged. And at the GSMA, we specifically wanted to understand if by making value chains more transparent and efficient, digital solutions could help farmers increase the share they receive for the produce they grow. As a matter of fact, we conducted some research in the past that uncovered benefits for other actors within the digitized value chain, such as mobile network operators and mobile money providers, but also for agribusinesses. So, for example, for MNOs and mobile money providers, for example, digitizing crop procurement payments represented a significant revenue opportunity of up to $3.2 billion over a 5 years time frame. It was also associated with more higher customer loyalty and with unlocking mobile money adoption, which bring indirect revenue benefits to these organizations. And on the other hand, for agribusinesses, digitization meant greater control over their operations. It allows them to monitor their business more closely, provide more transparent transactions, and also create effective communication channels, both internally but also with the smallholder suppliers. However, there was limited evidence on the economic benefits for smallholder farmers. So that's why we conducted a study to identify the benefits that smallholder farmers can capture through digitized agriculture value chains, especially whether digitized models allow for increased farmer shares. So as we'll be discussing about farmer shares quite a lot, that is just right to define what we mean by this. So the farmer share is the portion of the price captured by farmers for the produce that they grow when it is sold to the final local value chain actor. And in our study, this final local value chain actor is either the last local non-transforming stakeholder, which is a very long word to describe a mill or a processor, for example, in cases when the produce actually needs to be transformed before consumption. But you could also be the local consumer when we considered the domestic e-commerce models. So with this context in mind, I will now hand over to Rodolphe to walk us through the specifics of the research and share the main insights from the 3 case studies we conducted in the rice and potatoes value chain in Nigeria and Pakistan. Hi, Rodolphe. Thanks for being
here. Thank you, Lisa. So I'm Rodolphe from Altai Consulting. We are the GSMA mail partner on the AgriTech program. So I'm very happy to be with you all today. So I'm going to present you a piece of research that we've conducted back in 2021 with the objective to understand if and how digitization leads to improve farmer share. So if you can go to the next slide, Lisa. So basically what we've done is we've conducted like 3 case studies in different value chains in Pakistan and in Nigeria, comparing various models. So the first case study is about comparing a traditional model, which is intermediary based in Pakistan, with an agri-business platform until the outcome. The second one focuses on the rice value chain in Nigeria, comparing a traditional model, which relies on integrated value chain with some intermediation, with a digital procurement solution. And the last case study that I will cover will go back to the potato value chain in Pakistan by comparing an integrated value chain with a digital procurement solution. So the first case study is about farm to home. And as you've noticed, we were very fortunate today to have a member of Farm to Home as speaker. So feel free to ask any follow-up question on him. But basically, Farm to Home is a part of Barabar Kisan, which is a leading agri-tech in Pakistan. It is a platform that buys produce directly to the farmers and sell them to end customers, being like restaurants or individuals directly. And by doing so, like bypassing traditional intermediaries. So here we are in Punjab, so in Pakistan, where more than 80% of potatoes are grown. So if you look on the left, you have the traditional model, which is an intermediary-based value chain. And in Pakistan, you consider that you have like up to as many as 5 intermediaries. We call like middlemen, like RTs, you have brokers, traders, and wholesalers and retailers up to the final consumers. And when produce follow that path, you can consider, and all research shows that farmers could capture between 40 to 53% of the value. So the farmer shares will amount to those percentages. And the main reason being, as Massimo rightly defined at the beginning of this webinar, complicated value chain with a high number of intermediaries. On the right, you see that the farmer share can be as high as 73% thanks to the farm-to-home solution. And basically, like the two benefits are as you can see, like disintermediation, and also storage that include like a quality element to it, like extending seasons and providing end customers with quality produce. So now we are moving to another geography and another model we would like to consider, which is Agromole Nigeria. So Agromole is a Nigerian agri-tech that delivers agronomy and extension information to farmers, as well as access to buyers through its platform. So in Nigeria, one has to admit that the boundaries between integrated and intermediary-based value chains are often blurred, given to the difficulty of buyers to secure volumes, which is definitely one of the challenges. So on the rice value chain, you have like up to 4 intermediaries here, and the farmer's share evolved from 59% to 85%. And on the right-hand side, thanks to the fact that Agromole allows the millers to buy like larger quantities at once, and hence this rice is able to fetch higher price because of the decrease in transaction and in transport cost. As much as 85% of the share goes to the farmer. And these add to other factors which are obviously linked to storage and the quality. Basically, the millers are more comfortable buying through the platform. And the farmers, when they don't get, when the value chain is already deaggregated and they don't get more present with Agromole, still they benefit from access to market, access to inputs, and access to financial services. And again, this boils down to an expression that Massimo used about like who makes the price on the market. So when you have the volume, you make the price, and then your produce fetch higher price points on the market, and that's definitely one of the benefits of Agromole. So let's move to the third case study, which is about a contract farming entity, which is RIP Agro. So RIP Agro is also part of Barabar Kisan in Pakistan. And it's both like an input provider and an off-taker, backed with contracts with leading processors, that are very often like located in Punjab, and you will see why the fact that processors are located in such geographies plays a role in a RIP-Agro model. So here we look at producers in KPK. Basically, KPK is a province in. I mean, it's a group of provinces in western Pakistan. And when potatoes are off-season in Punjab, which, as I mentioned, like is a large producing potato area in Pakistan, RIP-Agro aggregates the produce from the KPK farmers and we sell them to the large processors in Punjab. And by enabling the smallholder farmers in those provinces to access like large processors, it obviously allows them to reach market they would not have access to locally, where the volumes are less significant. So RIP-Agro operates a digital procurement solution that does not reduce intermediation in a value chain per se, but offer access to larger markets on geographies to farmers in KPK. RIP-Agro doesn't take high volumes, high shares of commissions as part of the process, but still there is a transportation cost that needs to be added to the equation, and that is why, as a result, the farmer share amounts to roughly the same amount. So the benefit there is not an increase in a farmer share per se, but more in additional access to market on top of value-added services such as advisory and the most important also financial services. So what we've learned from our research is threefold. Lesson one, we've learned that bypassing intermediaries that connect farmers to markets definitely increase the share the farmers capture on the final value of the produce they sell. This is very much illustrated in a case study 1 and case study number 2. Lesson 2 we've learned is that in integrated value chains, the efficiencies that agribusinesses gain from digitization may not be passed on to farmers, since farmer shares in digitized and non-digital models are comparable. Though, as you can see, there are like other benefits that I've mentioned. And the third lesson we can take from our research is that digitized agricultural value chains, they are a catalyst for broader benefits to those smallholder farmers when they provide an entry point for value-added services such as financial and advisory services. Over to you, Lisa.
Yes, thank you, Rodolphe, for sharing the insights from the research. I think it is good to see different business models and how they actually impact the farmer shares. And it is really interesting that you mentioned that bundles of services actually provide more value to farmers, because that's what we're going to explore now with our two panelists. I have the pleasure to welcome Azam Khan from Farm to Home in Pakistan and Fajirul Baghi from Agromole in Nigeria. So they represent two of the organizations that participated to this research, helping us to collect the price points for the produce they buy from farmers along the value chain. So let me introduce them to you. Azam Khan is passionate about agriculture and wanted to help solve the challenges facing agri value chain in Pakistan. So he co-founded the agri-commerce platform Farm to Home in 2018 to empower both farmers and consumers. And Fajirul Baghi is a seasoned project manager at Agromole with a background in engineering and 7 years of experience leading cross-functional strategic and operational products to improve business productivity and make significant bottom line impact. So thank you for being with us today, Azam and Fijiro, to join our panel discussion. So we will be talking about the bundle of services that both of your organizations have put together through digitized model to provide additional value to farmers. So I will turn to you first, Azam. Having heard the research that Rodolphe presented, how do you explain that your digital business model helps increase farmers' share so much in your market?
Well, Rudolph already explained it better than I'm going to do. So basically, we are eliminating intermediaries. As like Rudolph said, on an average, there are 5 middlemen that come in between the conventional value chain who take up to 50 to 70% margins per product. That value actually mounted up to more than $4 billion in 2020 only in fruits and vegetables. The middleman charges the farmers fees, including logistics, unloading and unloading, plus 10% commission on selling of the produce, also holds the payment for several months. We bypass all that and give the farmers additional 2 to 8% depending on the crop and quality of the produce. In total, giving the farmer of an increased share of just about 30 to 35%. One of the things that we at Farm to Home are working towards is a custom digital platform which is going to give farmers a much greater market reach, which in turn shall ensure better rates by helping eliminate multiple heads in the value chain.
Thank you. Thank you. That is really good to hear and confirm actually the results from the research that reducing intermediaries allows to really boost the shares for farmers. So I'll turn now to Fijiro from Agromole. The results are a bit different in the case of Agromole, where our research shows that farmer shares only increase marginally, mostly when intermediation is reduced, right? So what do you think this is? And is there other ways that Agromole could support farmers in receiving a higher share on their projection?
So apparently, Agromole offers farmers like about 85% shares when compared to traditional value chains, which offer about 59 to 85%, depending on the intermediation. So I think what just this demonstrates is that every advantage of digital procurement system for farmers rely on how much the value chain can be streamlined and compressed. So therefore, what this research has shown to us at Agromole is that digitization for the sake of digitization will have little to no effect on the percentage that the farmer gets in the long run. So what we are doing is that we are concentrating our efforts to digitize to actually reduce and streamline the value chain. So we are trying to lower the distance between the farmer and the final consumer. Ultimately, the ultimate goal is to come up with an ecosystem where the farmer is directly in contact with the final consumer. So for all of this, what Agromole we are presently doing is that we are ramping up our direct procurement efforts, which would ultimately eliminate the intermediation between the farmer and the markets. And we are also building a marketplace, a value chain marketplace, so that all the participants in the value chain can interact directly with each other. So the farmer has direct contacts with the consumer and with the agro processors and all those things. So essentially, as I would like to just point out, digitization for the sake of digitization wouldn't have an effect on the margin. So the only way the farmers can get benefits is where the digitization efforts is targeted towards streamlining and reducing the intermediation between the farmers and the markets. And that's what Agromole is working on.
Thank you, Fijiro. It is really great to hear that you concentrate your efforts now on doing direct procurement, because that you have identified this as a way really to increase the shares. And what I'd be interested to hear from you now, Fujiro, and then we'll turn to Azam, is in addition to increase the shares, do you offer any additional benefits to farmers in your, in Nigeria, to help farmers improve their livelihoods? What are these services and how they address farmers' most pressing need that Massimo talked about?
Okay, so apart from the fact that there are a lot of middlemen and there's a lot of intermediation, right? We've also noticed that there are other factors that affect the farmer's the farmer's profitability, right? And there are problems, for example, where the farmer, skills, like knowledge and skills. So the farmers don't have, because of low level of literacy and education and training, the farmers don't have the knowledge required to increase their productivity. The issues of equipment and tools, where the farmer have access to the right tools, machinery, and infrastructure, and as a result of and even when they have access to this machinery, there's no knowledge on how to use the machinery. There's capital, for example, where farmers they don't have access to financing or credits, so they can't really expand their business or buy equipment or buy fertilizers, hybrid seeds, and the rest. There's market access, right, where the farmers don't have access to a market that they can sell their produce as a margin that covers up their cost for production, and there's limited scale. So because the farmer is independent and is a small scale farmer, he cannot benefit from the economics of scale, and he cannot even he has no leverage during negotiation. So broadly speaking, this categories of issues when you think about it differently, it can be we can divide it along two lines. So things like absence of knowledge and skills, absence of equipment and tools, and capital. All these factors affects the farmer's income. You understand? So if the farmer had more knowledge, he can produce more and he can have higher income. If the farmer had better machineries, he can produce more and he can have more income. If the farmer had more capital, he could plant more and have more income. But when you look at the last two, which is market access to the market, and limited distance, scale, and leverage, those two, for me, more or less speak to margins, right? So the farmer, so what we at Agromole we're trying to do is that what we are actually doing is that we're creating solutions that cross across all 5 of these problems that we've identified that the typical farmer faces. And we've built technology to address all of this. So for knowledge and skills, we have a digital advisory service that supports the farmer all through the planting cycle, and gives the farmer the information the farmer needs when the farmer needs it, and in the language or in the way the farmer would understand it. For equipment and tools, we also offer things like tractorization loans, labor loans, which is to support the farmers to buy to afford to mechanize to do mechanized farming, to afford to pay labor. Access financing. So if the farmer wanted to buy a tractor or asset, so we have loan schemes that farmer can pay instrumentally. So for access for asset financing, for capital, Agromole has a full range of loans that we support farmers with, from input credits to nano loans to asset financing, to labor loans, structurization loans. So then what happens is that the farmer who may be under traditionally won't have had access to these financial services from a traditional bank can now access financing and credit to actually expand and increase the farmers productivity. Market access, we've built through digital through direct procurement and our aggregation efforts, we're able to access to connect farmers to the market directly. And for the scale, what Agromole has done is that we've taken that burden off the farmer, yes, and giving the farmer leverage. So we are negotiating with the input producers, buying the inputs in bulk, and because once we've done that, we can actually buy it at a rebates of close to about 15%. And the outcome of this is that when we give these inputs to the farmers as a loan, we can offer the farmers single digits interest rates, right? Compared to a bank that's going to be about 20 to 25%, right? And everything. So what we have done is that we are intentional about transferring all the advantages that we get to the farmers. And the good thing is that then the farmers cannot, and all this is just a further proof because the farmers cannot access all these services through the traditional ways, through cooperatives and through traditional banks. So what Agromole we are very, very farmer focused, and we take our mission to increase productivity, to improve and to create prosperity for the farmers seriously. Thank you.
Thank you, Fajiro. Yeah, I think it is really nice to hear that you're working to provide those services that are not there in traditional value chains. So that's really good. And what about you, Azam, from farm to home perspective? What are the additional benefits that you provide farmers to help them sustain their livelihoods?
So Lisa, we at Farm to Home are introducing digital payments, a farm to home wallet actually, to ensure timely payments to farmers, which is one of the biggest pain points of farmers in Pakistan. Farm to Home is making sure these farmers have access to online banking. This will help the farmers go digital. Thus, it will be easier for them to get agri loans and insurance once he takes this small step. Two of our partners, Bakhabar Kisan and Weather Wale, are giving digital advisory, crop and weather related, to ensure higher yield and lesser costs incurred by the farmer. This is helping our farmers in generating more cash flow and thus impacting their livelihood for the better. We are trying to build CA facilities, cold storages across Pakistan. Massimo already mentioned this. In perishable, when you're handling perishable produce, this is a must. We will develop a new model for the farmers we work with. As we look at past data, there are some similarity in trends. Thus, we can make farmers our business partners in this model, in those commodities, and thus share profits with them. Along with CA facilities, we are working towards specific logistics so that in transit, there are minimal wastages and damages that occur right now in the supply chain of Pakistan. Thus, we are enabling a cold chain in Pakistan. Like, no, there is no established cold chain in Pakistan. This will help not only our farmers, but Pakistan as a whole, because wastage of the top 9 fruits and vegetables in Pakistan total up to just about wastage was $2.1 billion for only the 9 products, which was only A and B. Let's forget C and D, just the A, B produce, which could be exported as well, was this $2.1 billion in just wastage. On an average, there are 40% post-harvest losses. We are also automating most processes from seeding to harvest. We are enabling some of our farmers with high-tech equipment such as drones and mechanized machinery to enhance their processes. In addition, Farm to Home is currently deploying teams of agri specialists in and around the production clusters, since it is important to ensure that these farmers adapt to new and upgraded processes. Thank you.
Thank you, Azam. What I hear also is that to be able to provide those bundled services is that partnerships are really important. And for example, you mentioned Babakisa, and they allowed you to put together these advisory services that helps farmers get knowledge and information on the crop they grow. So, conscious of time now, and I will go directly to the last question that we have for this panel discussion. And this is, I would like to hear both of you share some of recommendations you will have for other digital agriculture service providers to strengthen the business case for farmers in digitized agriculture value chains. You two have managed to do that. And so if you had any recommendations for other agri-techs out there, what would that be?
Do you want me to go?
Try to be brief, please. Yes, because we only have a few minutes.
All right. Let me answer this question. Over $10.3 billion of post-harvest losses occurred in Pakistan only in fruits and vegetables. If you look at all the 10.3, this is a massive number. That number is too big for us to right now to solve on our own. In my opinion, even 50 startups like us start tomorrow, this won't be sufficient. I would request and humbly advise all the agri-service providers out there to come together, join hands, form as many synergies and partnerships as possible, and together move forward for the betterment, not only for our country, but more for every country. All of us already know what to do. We are already on the same page. This is a huge problem of food security. This can only be solved if we join hands together.
Thank you. That is very clear. Collaborative efforts. It will be your recommendation. And what about you, Fajil? Any recommendation you'd like to share today?
Okay, so my recommendation for other digital agricultural service providers is that number one, improvement of the farmer's economic outcome must be the core of any solution, first of all, right? So the solution has to be farmer-centric, that's be farmer-focused, right? So whatever advantage, right, that you from doing your business that you've had from this thing, from your skill, your negotiation power, whatever benefit from economics of scale and from negotiation power that you might get, you have to find a way to transfer it to the farmers, because what happens is that providers must, and you have to be deliberate about this, otherwise providers might start to prioritize their revenue over the needs of the farmer. And so why I use the word deliberate is that you must purposely incorporate this thing, being farmer-centric, into your business model so it can be sustainable. Also, another recommendation that I would give is that no matter what you do, you should also remember, right, that the ultimate goal is that you are trying to help the farmers, and you are trying to reduce the value chain, and you are trying to digitize value chain, right? You're not there to be middlemen or to replace the middlemen. So at Agromole, at every point in time, we always try to be farmer focused, and whatever we do, we make sure that we do it for the best of the with the farmers' best interest at heart. So my ultimate recommendation for other service providers is that whatever you do, you have to be farmer focused and farmer centric.
Thank you very much to both of you. And it is great, Fajil, that you mentioned the importance of being farmer-centered in all that you do, from designing the solution to being on the field with them. So thank you for participating. It was a very interesting discussion. I hope we could have more time, but unfortunately, I think we need to wrap it up now. But at least I think it gives us a good understanding of how digitized agriculture value chains can be leveraged to address challenges that farmers face in food supply chains and help them be more productive, and as a consequence, improve their income and livelihoods. So I think we have a few questions from the audience. I think we're going to take a few additional minutes if you could stay with us, just a couple of minutes more so that we have time to address those. And in the meantime, I think my colleagues have put on the chat a link to a post-webinar survey. We would love to hear your views and your feedback on the session. It will only take a few minutes, so thanks in advance for doing this. Yes. So we have a question probably for Massimo. What is currently considered to be the main challenge for smallholder farmers in developing country?
This is a question. if you look at most of the researches, surveys, and stuff like this, access to finance is the most mentioned one. Not only for smallholder farmers, but also for agri MSME, micro, small, and micro enterprises. So that's the main barrier, if you will, to expand your business, to improve your business, and to So that's the key one. But I would say that I think we all explained it, right? Problems and barriers are bundled themselves, and you can just not work on one without looking at the other ones. And I think this was greatly explained by both Regira and Azam in their presentations today. So, but still, yes, I mean, any study you do, any survey you look at, you would find access to finance is the issue.
Mm-hmm. Yeah, very clear. Thank you. I think we have a question on the specifics of the research. So I think it would be great, Rodolphe, if you could address you measured farmers' share instead of changing profits for farmer. So those that necessitate that they don't gain from efficiency of digitizing value chain. In other words, if digitization brought efficiencies that raised profits, but they were divided in same proportion as before, then percent of share wouldn't change, but farmers benefit in profit growth.
Yeah, that's a very interesting point and a very valid question. Here it would be insightful to conduct an additional research on that, because we would need a much larger control group to assess efficiencies on how efficiencies turn into increased profit. And unfortunately, as part of this research, we couldn't cover that, so we had to restrict our scope to farmers' margin. But that's definitely something a very interesting research topic.
Yes, I agree. Thank you, Rodolphe. I think I'll just take a few more, and I see one for Azam. Someone is asking to please detail a bit more what kind of services are being provided in your model. So I think you mentioned it in the panel discussion, but if you could just quickly summarize the type of services you provide in the model. Hi, Azam, are you still with us?
Mute. Hello, can you guys hear me? Hello?
Yeah, you're back on. Yeah.
Yeah, so basically, Farm2Home is currently working on deploying teams consisting of agri specialists, is teaching and upgrading and enhancing the farmers' processes. Along with us, we have teams from Bakhabar Kisan and Weatherwale. Bakhabar Kisan is giving the digital advisory and inputs. Weatherwale is giving accurate weather to our farmers, and like Rudolph said, that Reap Agro is contract farming, so it's also sister concern. So it is contract farming for us on our potatoes value chain. So we aren't doing it alone. We have such teams. This is basically it can't be done alone. So together we are doing it. We're solving this huge problem here. Especially Pakistan's population is 220 million people. So it's good to do this. It's 60%, 62% are directly depending on agriculture of people in Pakistan.
Thank you. And one last one for Fajiro. It sounds like farmer shares improve only when disintermediation, such as through e-commerce. So there hasn't been viewed yet improved bargaining power on price by aggregating farmers, but is that just because apps haven't focused on tackling that? Do you have an element of answer to that question, maybe, Fajiro? Hello. Are you on mute? Maybe you're on mute. Could you please unmute yourself?
Sorry. So essentially what Agromole we're doing is that we're trying to improve the farmer's leverage. And if the farmer has better leverage, then the farmer can negotiate for better prices, right? And then ultimately the farmer can have better margins. So in order to give the farmer better leverage, first of all, what we are doing is that we are purchasing the inputs in bulk, in large in large quantities. So and what happens when you do that is that it means that then before the input gets to the farmers, there are still middlemen, there are wholesalers, distributors, then the input gets to the farmer. So it gets to the farmer at a slightly more expensive price, which would have increased the farmer's cost of production. But if we cut out all that intermediary and input gets directly from the manufacturer to the farmer, what has happened is that then the farmer's cost of production has reduced, right? And then it means the farmer can make better profits. And also, at the other side of it, after the farmer is done producing, right? So first of all, the inputs are cheaper than what farmer would have used. After the farmer is done producing, now we now connect the farmer directly to the final consumer and start cutting out all the intermediaries. So then it means the farmer can sell at a better price. So if the farmer's cost of production is reduced, one, right, and farmer has the benefits of negotiation, because now since we are purchasing the inputs in bulk, right, farmer can negotiate for better and has better leverage. And also the farmer's selling price is higher because he's selling not to the intermediary but to the consumer. What has happened is that in that process, what Agromole has done is that we've both improved the farmer's income, one, and two, we've improved the farmer's margins. Then when you now add that to the fact, right, that Agromole is committed to moving farmers from subsistence farming to commercial farming. So what we do is that we support you for 1 hectare, and when you do that 1 hectare, we'll support you for 2 hectares the next planting season. So we are actively trying to move farmers from farming 1 hectare to farming 10 hectares, farming, and so that then what we are doing is that we are now moving farmers from subsistence farming to commercial farming. So with that, also the farmer now starts in the long run to benefit from the economics of scale. The farmer starts to have better leverage. So everything that, so all what can solve all of this, and what Agromole is committed to doing, is to, one, give farmer leverage, and two, give farmer direct access to the markets. And then with that, we can both increase the income and the margins of the farmer.
Very well, then. Thank you. You tried to wrap it up very, very quickly because we've reached the end of the hour, but it was really great to have the opportunity to answer some of these questions, and you've done it perfectly. So yeah, I think now what is just left for me to say is to thank you all for participating and for being really attentive and asking those questions to our panelists and speakers. And I would also like to thank Massimo, Rodolfo, Azam, and Fajiro for sharing all these insights and knowledge with us. So we hope to speak again very soon. Don't hesitate to reach out if you have any questions or requests on this webinar. You have my email address here, and I will be happy to support. Thank you again, everyone, and have a great rest of the day.
Thank you. Thank you, everyone.
Thank you. Bye-bye.
Thanks, Lisa. Thanks, everyone. Bye-bye.
Thank you, Lisa.
Bye-bye.
Bye.